Love how they give the leave meeting when it tells you it's being live streamed to account for Karens. I love it. All right, over there. We are live on other platforms. Let me also be live on TikTok. Here we go. Hit live on TikTok. If the global margin call continues, if this is nowhere near the end, then um, the market circuit breakers could get triggered, which would be pretty rare. It can happen. And based on this bounce right here, I'm not sure that's going to happen. I don't think that's going to happen. It should have already happened. Like, in other words, if we had 24/7 markets, it would have already happened. All right, let me get this TikTok up. Okay, go live. There we go. Stocks meltdown. That should do it. That should bring in a few people. All right, that's all my coffee. See, the VIX is coming down from 65 to 55 already. This is the strongest pullback. Pressure has been let off. How? Why? Because brokerages potentially have had their margin calls satisfied. That could be it. It could be all green buying all day from here. You better be careful because you know, these things happen once every, well, this kind of a crazy thing. Well, once every 10 years, 15 years, 10 or 15 years. Even every 5 years, you get a something like this. And then everything goes back to usual after a certain point. I mean, just remember the pandemic. It had a bottom. The world moves faster now. Recessions recover faster, panics recover faster. So, you know, this will bottom and it may already just have. We'll see when the open US markets open, because probably there's more to come. Uh, but for now, it is what it is. Let me see, possibly also the Japan market might have closed. (3 p.m. their time). 2 a.m. Now this is continued regardless. That doesn't seem right, but okay. All right, good morning, everybody. We do have global meltdown on not just the stock market, but everything. Everything. And do you know why? Except for maybe gold. So let's see if I can summarize this now from everything that I've ascertained. You can borrow money, you can borrow yen from Japan really, really cheaply at 0 point, let's just call it 1%. So let's call it very, very cheaply. Then you can invest that into, say, bonds somewhere else in a very good market like the US at 4.75%. So you're going to make 4.75% on all your money that you borrowed from Japan. Only problem is, in order to pay back the Japanese yen, you need to have all that money. So if US markets go down and your assets go down in value, it becomes less plausible that you could pay back everything you borrowed. Conversely, if the yen goes up in strength, then so does the rate of the borrow, and so does the yen. And now you need more yen compared to whatever currency you're in, US dollars, to pay back the amount that you borrowed. So now you're stuck underwater for 10, 20, 30, 40% of everything that you borrowed. And so that triggers a margin call, which says, fork over the cash, sell your assets, let's go. We need to pay off this deficit and deposit more cash. Let's get this going. So brokerages that lent out the money to the borrowers are now margin calling for the difference. And so these hedge funds and institutions, investors, are selling assets as much as they can in order to meet that margin call. What if you borrowed money off of the yen, and instead of investing it in, and maybe you got US dollars for it, so you bought US dollars, and then you bought real estate, and that's all you bought, and you didn't put it into any instantly liquid uh, assets? Well, you're in real bad trouble now. So there's going to be some fire sales in real estate as well. Right now there's basically a fire sale on everything because they have to meet the margin calls requirements. And it's not known how long this will go on for. It could have already been satisfied. We are already seeing the yen top, which is over here on the bottom of the screen, kind of hard to see for you guys on TikTok. The yen already now has triple topped at intraday. And this is what it looks like. JPY USD on this chart over here. So on the daily chart. So this is an extreme move. It's basically a global short squeeze. It's a global short squeeze on assets, some on some assets, however much money was borrowed off of the yen and then invested elsewhere in the world, called the yen carry trade. However many hedge funds, however much billions or trillions has been borrowed, it's going to be squeezed. So it's not going to be everything. Okay. So you don't have to panic as far as you don't have to panic. This will be over at a certain point. It may already be over right now, but it could go on for until my estimation is it's going to be over today. And that tomorrow morning, all those margin calls will be satisfied for the most part, and we won't really see too much more based on that issue moving forward, except for like I said, the slower selling assets. We might see some ripple effect over the next month from that, but not really so cataclysmically as the most liquid things, such as stocks in the stock market. So once the stock market opens in about 10 minutes, uh, if there's any more liquidity, if there's any more margin call to be satisfied, then the hedge funds, the institutions, they're going to have to start shoring that up, and uh, that's probably going to come from the safest assets they put it in. You probably would think that the safest growth assets is probably where they put it, and I'm thinking that'd be Nvidia, Microsoft, and the Magnificent Seven. I think those are going to come under a lot of fire because that's where big money would put all their money. That's one of the best places, but it could also be Johnson and Johnson and a lot of huge Boeing and a lot of huge companies. The big caps and the mega caps are going to get sold off here. Maybe if there's any more margin call to be satisfied. I think there probably is, but we shall see. The VIX is now returned. The VIX, by the way, amazing, hit 65 and is now back to 55. We were at like 17. The VIX was at 12. Anything under 20 is, is okay. 15 is ideal. But we hit 65, which if you compare it to the pandemic, when the pandemic hit, we hit 85. So we're really close. I mean, this is a huge cataclysmic thing going on, but it's much more definable. It's simply money needs to be liquidated across everywhere that everyone who had money put it. Just imagine just an average, just a bell curve. Where did everybody put it? Mostly in these things, right? And that's going to be probably mostly stocks, some bonds, and real estate and crypto. I mean, everything's going to be slightly affected. However, the really big thing you got to realize is it's going to end. It's going to be over at a certain point, and it's going to be a pinpoint. There's going to be a point where all the margin calls have been satisfied and it's just unnecessary. From that point forward, there might be some more hedging and extra selling just to be safe, adding some buffer. The hedge funds might, overdo it, get themselves into a point of safety so they don't have this kind of emergency again. So there'll be an extra 10 or 20% ripple effect for some days or weeks, depending on how long this takes. But for the most part, it's going to bottom. It's going to end at a certain point. Okay. And so it's a good time to be in cash because you want to grab whatever you want to grab. And if you mistime that, and by the way, this is channel again, not financial advice to you specifically. This is educational purposes type of advice. This is not me telling you to do something. Just remember that, okay? So don't come back to me saying, you told me to do that. I did not fucking tell you. I don't even know who you are. This is a live broadcast on TikTok and different platforms. Give me a break. Nice try. So if you make a fuck up, it's your own, okay? The point here is, though, that you could nibble and leave some gunpowder around. You could be nibbling at some things that you've always wanted to nibble at these prices, and you can't. You can't know, is this the bottom or not? I mean, I have a much better way to gauge it and stuff using the VIX and uh, all that inverse correlations and watching all the things and metering it. But even I can't be sure. Okay. So, but you can't be really sure. That's what we know. If you don't have a setup like this and know what every little thing is meaning, then, your timing is going to be very up in the air as well. But the thing is, one thing I can tell you is that right now, like when the market opens, right when the market opens, regardless of what the future does at that point, whether it goes back up or it goes down further, it's still at that moment, that's the most incredible discount in just a matter of a few days that prices will have seen in a long time. Like if you measure it from, hey, I always wait every couple of years for a massive panic drop and then I buy and hold for a while. If that was a strategy, here it is. This is it. The market opens in 6 minutes. So you see what I'm saying? So even if you're wrong, leave some available. Try again in a day or a week or a month. As you can see, if you just look at all prior drops in history, end at some point. They end at some point. You never have to worry about you. You'll learn that if you've been in the market for as long as I have, 25 years, or anybody who's been in the market for more than 7, 10, 15 years, you see the cycle. It repeats and you study it. You study it. So it goes back all the way to Egyptian times. I mean, these things, it's that, there's never been a time where everything disappears. Only time it would is the apocalypse. So, and you don't got to worry about that because you'll be dead. So, you know, do not be afraid. Or I had a question this morning. Should I take all my money out of my brokerage, like a run for the banks? But this is what people are thinking. They're concerned. They're worried. Um, no, keep it in there, ready to fire. Those brokerages with your money, that's the loaded gun. Get your hand on the trigger and be ready because it's target time. This is it. Blood is in the streets, and it's time to take no prisoners. So you know, yeah, exactly. Jose just says you're going to regret it. As far as he's talking about not pulling the trigger on things. Not only should you not take your money out of your brokerages, that's exactly where all your money should be. I mean, again, this is, you'd make your own decisions, right? This is an educational program. But you need to be looking at what you want to be in for the next. I mean, if you could say, "Oh, I wish I could have bought, Apple." Like, let's go over to Apple. I wish I could have bought Apple at 197. If that's you, then you buy Apple at 197. I wish I could have got Amazon, a year from now. I wish I could have got Amazon at 155, 154. It was 190. So it's not a huge discount we're talking about here. We're talking about 7%, 10%, 15%. Um, well, Carl just asked, how far down are we from highs? And, let's see, it's not a ton, 15%. I mean, that's not a crash. It's a strong correction. And by the way, back in the pandemic drop, where's that? 2020. This is the pandemic drop. Remember how long the pandemic took? This is not a pandemic. This is a Black Monday. A 1987 Black Monday. You guys see the Wolf of Wall Street? It's a one-day cataclysmic panic And then it might have ripple effects and skittish investors for a few days or a few weeks. But this is not going to be a 3 month decline or however long that was, a 1 month decline. And look what happened after. This is what you're worried about. And you take all your money out of the brokerage here? You take out all your money out of the brokerage down here. No, that's where you put all your money in. And then look at this, is one of the biggest runs we've had in the market in history after that. I'm not saying that's going to happen, okay? But the point is, everything's on discount. Everything's on discount, and this is going to bottom somewhere. And so you just have to play it in such a way that you won't be hurt if your timing is wrong. Market opens in 1 minute. If your timing is wrong and whatever you just did is down another 15 or 25% over the next 3 months, you have to make those actions with that in mind. Give it some buffer. Give it some large buffer. You don't know. But like Jose said, you're going to regret. I mean, how much, give it a try. How much can you look back and go, man, what are you going to regret? Yeah, I mean, Jose said it. You're going to regret not trying. Have your stops, figure your risk. If I lose this amount, such and such and such and such, diversify, grab a couple things, leave lots of gunpowder for buying tomorrow and the following days and possibly weeks and possibly months. Watch out for leverage. Don't leverage. Don't leverage at all. And also options, don't fucking do them. If at anything, leaps or 3 months or more expirations, okay? But don't do options. They're all going to be priced extreme now. And whatever money you could make on whatever move you think you're going to make on them is going to be priced in because everybody's going to be going after them. Don't be that guy. Be the smart guy like me telling you, stay the fuck away from them and get longer dated contracts, if anything. All right, market's open. I got some shit I got to sell. Just give me a second, but let's watch what happens here. This is going to be interesting. I know, right? I need to close my sold put vertical. There it is. As soon as possible. Got it. Okay. And that's fine. That's my biggest thing I had to worry about is all taken care of now. The rest are maybe snipping some small caps in the bud. All right. So now we watch the market. Let's see what the market's going to do. Look at that. Is it a panic? No. Could it turn into one? Yeah. I mean, we've seen that in the last few days, but the last few days created what happened over this weekend and last night and this morning. In other words, is it over? It might be over. Here we are at the open, and there's no panic. Where's the panic? Maybe it's going to come. If if the banks asking for these margin calls give the hedge funds and institutions 20 minutes on the open, well, they're going to wait for the price to go up a little bit before they punch the big red button. They give them an hour. There you would that's the situation again. But I wouldn't be surprised. I think they would give them less than 5 minutes. Have this money freed up in less than 5 minutes, or we will force liquidate. You've got 3 minutes. They probably told them. So if you don't see, so if you don't see, look at Apple being bought up. So this is what it's turning into. Everyone's buying the dip. All right. and I don't really need to. I kind of want to too, but I'm not in a situation where I need to. But that's what you got to do. So if you have investments you wanted to get, it's looking like I was right that this is going to be the point in which to grab them. And again, if you're going to do that with options, make sure it's leaps or 3 months or more expiration because all the other ones are going to be priced way too high because of all the people going after them, and it will not be profitable. I'm looking at some Amazon here. Fire sale, fire sale. Grabbing Apple, Microsoft. I mean, all of them. Just a nibble, just to start it off. A nibble on all of them. Microsoft's not priced very well. That's interesting. Okay, that's a little better. Let's try that. Okay, just got the Amazon bill. Going after Netflix. Those options are grossly mispriced right now. Stay away from those. How about AMD? And then there's Nvidia. AMD checking on that. I gotta look at the AMD chart other than the recent sell off. How has it been doing? Yeah, no thanks. Nvidia much better and going up. Little bit of this, little bit of that. There, just grab some Nvidia. All right, let me see if I have any open orders. Open orders. No, looking good. The VIX is down to 52. I mean, it's reverting. You have to be really careful. Do I have copy trading? No, I don't. Yeah. But make sure you follow me. Don't forget to follow me, guys. And I also have a trading group and alerts that you can check out. I have a lot of interesting resources. My favorite books, if you want to learn more, stuff like that in my links. Link in the bio. Link in the bio. Link in the bio. Yeah, but I don't know about AMD, Carl. Yeah, I don't know. Uh, don't love that chart. But I picked up, let's see, I picked up Amazon here and Apple and Microsoft and Nvidia. I skipped Netflix only because the options were not looking super duper. But let me go back to Netflix again and see if they filled in the liquidity a little bit. And they have not. The spread is still quite wide on them. What does that make it? Hmm. Right, dollar five. I'll let Netflix sit there, order sit there. The kind of options I'm buying are spreads. That kind of negates some of the premium. But yeah, I don't recommend you buy options in this situation, or if you do, you get 3 months or later. Leap options, it just depends on what you're doing as a trader. But a moment like this should be massaged. You know, you don't just go with a sledgehammer and go bam. You need to just a little sprinkle here, a little touch there, a little rub over here. Give it an hour, try again some more tomorrow, put it all together, expect to hold for a while. I mean, everybody's probably looking to buy into a panic like it puts. But like I said, this yen carry trade margin call might have been satisfied. It may be over. This is the bottom potentially. And if I'm wrong, then they're going to be selling more, and it will go down and it will break today's low price. You need to, exit at some point when and if you are wrong. Everything's moving. Everything I said so far is going up. Buy the dip. Buy the dip. The trading platform I use, I mean, this is TradingView over here. I trade on Thinkorswim, which is with Schwab. Um, I have everything though: Webull, Robinhood, TradeStation, E-Trade, IBKR. I mean, you name it, I have it. Tradier, um, Tasty Trade, you name it, I have it. But just send me a private message if you want to learn more about how to trade and which platforms to get into and stuff. I would recommend Robinhood if you're a beginner. Yeah, I'd say, yeah, about correct. Let me go check out my Java position. Okay, it's bouncing after opening quite low, moving down, moving back up halfway. Uh, I'm gonna go ahead and close it. You gotta follow your stops. Okay, so that was a penny stock trade I had running. But see, the market is going up. It's going up, and the VIX is going down. The VIX is now 47. So, like, looking at the VIX, down here, remember it hit 65 pre-market. There it is, way up there. And then when we were talking about it was about 55, and now it's at 50, but it hit 47.50 and could be going back to 45. I mean, this panic might be over. A lot of people don't understand necessarily what just happened. When you understand what just happened, you understand that there's going to be a bottom. It's not everything. Like, did you borrow money from Japan and buy assets with it? No. Okay, what percentage of the earth borrowed from Japan and put it into global assets? You're lucky if it's 10%. And then that only needs to be about 30% satisfied for the margin call. So we're talking about 3% maybe. At tops, 3% a margin call on global assets. You know, it's probably more panic than reality. Everything's overly dramatic as usual, and it's probably been satisfied. From what I can see, nobody on TikTok did what? Bought the dip, and from what I can see, it seems it's over. You know, I happen to be okay. Wait a minute, here comes some selling. Let's see how strong it is. So here's the first time we've got some selling. I could be wrong. Let's see. We are getting some selling, so let's see how this goes. But the best way to profit off these is be in before it happens. I mean, cockroaches get squished. Be the guy that goes to the grocery market and buys the food. Don't be the cockroach coming in at the end, grabbing up the crumbs. Cockroaches get squished. Be the man. Be the man. Hello and happy trading from Saskatchewan. Hello, Parasika. Nobody on TikTok did that. Borrowed. Yeah, that's what I'm saying. Yeah. Borrowed from Japan and bought assets. Yeah. All right. A little bit of pullback. That was more dip buy opportunity right there. I'm going to double check on Netflix. What did I miss? I know I missed something. Okay. Microsoft, Nvidia, Amazon, Apple. I got those. What did I miss? I guess I have an order on Netflix. It's just not getting filled. What did I miss, guys? NLSP. I missed one of the big ones. I know I missed one. Nah, I mean, yeah, if those are the things you guys want, go grab them. They said Starbucks, Kava. I mean, if you liked it at whatever price it was, why wouldn't you like it more here? That's right. Yeah, that's right, Don Julio. That's right, Don Julio. Okay, so that's actually fine as well. Right. And the VIX is hitting 45, like I was saying, it just hit 45.80. Like, how bad is this? Like, that's what I'm here to tell you. How bad is this? Is it a pandemic? Is it going to last a month? Is every day going to get gut-wrenchingly worse than the day before? No. There's a little global margin call, and that's it. It's probably over. Like a flash crash. I don't know if you guys remember, well, very few of you know about this thing called flash crash. Just like something in the system got manipulated, and all prices on the stock market dropped extreme. I think it was like 11% or something. It might have been 20%. Circuit breakers turned on, and like 20 minutes later, it was all over. Everything returned back to their original prices. Who made money on that? Who made money on that? Either people who are already in thinking there would be a flash crash, which obviously no one was except the original people, and then people who got lucky because that was the direction they were betting in already, and then people who bought the dip. Yeah, I'm live every morning, but yeah, more reliably in our Discord. So click the link in my bio so you can follow me over to there. So I'm here to tell you this isn't the pandemic. This is not going to be a problem in a couple of days. In fact, it might be over. That's it. We saw it bottom before the market opened. Google, thank you. Marcus. Yes, Google. All right, let's go get some Google. I just, nibble on all of them. Let's see. Yeah, those options look good. Okay, excellent. Grab that. I'm just getting the put credit spreads on in September on the monthlies. But you could get shares however you want to do this. It's all good. On that little pullback that happened back there. See, now we're making new highs on the day again. The direction is up. Here's Apple. There's Nvidia. There's Amazon. And you have to say, well, if it's going up, then why did we go down? Right? I mean, a lot of people go, why are the prices here if everyone thought prices should be here? That's a really great question. But what you're not considering is that this isn't about what people think prices should be at. This is literally a liquidity event. This is some people made a mistake, and to them, maybe they don't even consider it a mistake. They might have been hedged, but it is what it is. And they were forced to liquidate, which means they had to sell like assets to shore up cash to pay back yen to Japan. I mean, that's all it is. They lost. Now we win. Now we get in on their misery, and then it's over. So where do prices of assets go from here? Wherever people think the price of Google should be, but aren't subject to having to sell because a bank is forcing them to do so via a margin call, which means higher. There ain't nothing wrong with these companies. This was just a problem with hedge funds and the Japan carry trade. There's nothing to do with how well these companies will be doing moving forward. It's over. So, what are you going to do? Buy the dip. Well, Warren Buffett selling Apple, that is interesting, but um, that could be a mini varied reason there. Uh, so, and I haven't researched it enough on what he said to speculate on why he did that, or if he's even come out to say. But maybe he wants to move it around. Maybe he's thinking he's going to die soon. He wants it to be more liquid. He wants to give away all of his money when he dies. So you can't do that if it's all in stocks. Like, what if he accidentally stays invested forever? Maybe that's not what he wants. I don't know. It doesn't mean that Apple's bad, but I will say this: that there are other companies doing better. They're looking better, but there's nothing wrong with Apple. One of the greatest things you could see happen is Apple down. I mean, this is a beloved brand. It was like nothing can screw it up. It's had its opportunities many, 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 many times, just like Tesla. You know, the haters or the non-believers, they get their thesis moments, but in the long run, it's a company that sells products that people fucking love. They work the best, and for that, they achieve a huge market share. How much of the market is iPhones? How much of the market is Apple computers? How much of the market is Apple watches? How many, I mean, just put it all together. They're doing fine. They're doing fine, and their balance sheets are good. Perhaps they're not as brilliantly leveraged or set up as they were when Steve Jobs was there, but they're not under any peril. They're in pretty great shape. And you don't really need to, I mean, you don't really need to worry about mega caps. I mean, that's ridiculous, right? Like, what are you doing? Like, you gotta worry about mega caps? Where do you think they're gonna go? I mean, that's almost silly when you think about it. If you want to play around with worrying about uh, whether or not a stock is going to plummet or not, do that on mid caps or small caps. Fucking small caps are perfect for that. If you want to short shit because you love figuring out companies that are overvalued, small caps are for you. Like penny stocking and all that. Wonderful universe. I teach that. So, if you're interested in penny stocking, make sure you follow me and make sure you click the links in my bio and come join our Discord. Market stick save? Hmm? Not sure what that meant there, Joe. It appears it's over, guys. I mean, it looked like it was over with the triple topping on the yen right before the market opened, right? So I could be wrong. Watch your asses. Be careful. If you need to hedge, you can hedge. If you need to get any options that are short term, make sure they're in the money options. I don't recommend you grabbing options on anything. But if you do, make sure they're at least 3 months or more out. Is the Schwab app down? This is exactly why if you were in my group last night at midnight or so, you would have got my message, which said, open your Schwab apps, open your platform apps, keep them open until the market opens tomorrow morning, because sometimes they'll lock you out during huge moments on the market like this. That goes for Robin fucking Hood, Webull, every platform out there. You need to, I know this from 25 years of experience. They fuck you over. You can't get in your app. So this is why last night at midnight to everyone in my group, I said, make sure you have your platforms open now and keep them open and turn off auto log off and all that. Make sure that your platform's already open so it'll be open when you need it. Trying to open it now is not going to help you if there's a problem. And they love to do that. They love to lock you out. Here we go. Robinhood and Webull having operational issues. See, they're not letting you buy. They're shutting you out. This is probably the buying opportunity of the year. When they do that, you know it is. When they start shutting the retail traders out, you know something's up. All right, you guys, it's the top of the hour. Thank you very much for tuning in. Bye, 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 buy the dip. Yeah, see you in the group, everybody. Thanks for tuning in. Make sure you follow me and click the link in my bio and come on over. Say hello. Let's talk. All right. I'll help you out. That's what I'm here for. 25 plus years trading. Bye now.